Disney stock up 21%, pathetic in 2025. And over the last 5 years, you've lost 20% of your money. Congratulations to you, potentially, if you've been holding on to the stock for the last 5 years, because it's not been good sailing for you. Especially for the looking at these numbers, the number 2 streaming site in the world. They have the best cartoon animation in the world. They have the Marvel Universe. They have Disney Cruise Lines. They have the best old school movies. They've got the theme parks, merchandise all around the world. They've got assets of hotels and everything all around the world. The list goes on and on and on. And this company struggles and lost 20% for you in the last 5 years. What's doing? Absolutely not good. Not good for you as a shareholder long term. But that doesn't mean you couldn't have made money in the stock over the last 5 years. I'll get to that a little bit later in the video. But yes, I am going to do a stock analysis on this video on Disney, as well as, if you stay right to the end, I'm going to do the intrinsic value of this company and how that, if this company is potential wowzer. And you'll be surprised about Disney in terms of figures. Potentially, this could be the stock for you, but it hasn't done anything for 5 years, but it doesn't mean the figures don't say anything different. Well, we're going to find out at the end of this video. I was pretty shocked at looking at this. I used to own this company. I pulled out. I said, nope, no thank you. I thought there was better investments. I got out of this profit, not a big profit, but I got out of profit, considering it's gone down 20% in the last 5 years. So I managed to get out and go into better stocks. But it doesn't mean it's not going to be a better stock in the next 5 years. That's where you got to do your research, folks. Not financial advice. Just some random guy on YouTube. Well, let's what are Disney doing well? What can they continue to do to improve? So Disney obviously is struggling with Netflix, Carnival Cruise Lines. This is their competitors, folks. Hotel industry, other theme park out there. For me, they're struggling to innovate. Make the changes needed to the services to improve to the current people around. They got the old mums and dads, but they got to get the youth, the generation. What are they doing for them? What are they really doing to get them involved? I mean, they do have the movies, yes, but I mean, in terms of like the 18 to 14-year-old, 40-year-olds, that's where they got to get to. That's where they got to try and get more people involved in this company and start being more innovative, so Disney can be what it once was, one of the best in the world. Because at the moment, they're not doing that well. And they brought a company like Fubo TV that is losing money as well. Potential for profitability in the future, but no guarantee of that. Could it be another dud investment for them? So there is some work to be done for Disney. Obviously, just improving attractions, adding more attractions. Why have they not got a few more attractions around the world? Australia potentially is what they have been looking at. Is they happening? It would be interesting to see. They need a few more theme parks, I think, would be good for them. But yes, so there's a bit of work for Disney to do to really get themselves up and rolling. Yeah, they're struggling to get the profitability with the streaming as well. That's been a downfall on their business for a while. Yeah, that's a good. But anyway, let's explore the Pirates of the Caribbean. Let's have a look sail through the 7 seas. Let's go to the deep dive riches of Genie in the Bottle's lair with all the beautiful gold coins from Aladdin. What can we do? Can we find a gem in the rough, folks? Can we find that little gem in the rough that can maybe be an absolute gold mine into the future? Not financial advice, to your own research before you invest into any stock. But let's get to it, folks. Yes, a stock analysis of Disney. What is happening? What is shaping up in their financials? Is it a stock for you? Well, you're going to find out right here, right now at Barry Charles. Disney stock analysis. So what is happening for Disney right now? They're around $110 stock with the 52-week range of $83 to $123. So this is what I'm telling you out there, folks. If you bought the stock at $83 and sold it for over $100, something like that, you made profit. So that's what I mean. Just because the stock's gone down 20% over the last 5 years, you can invest at different times in the stock at the lows and at a higher level, and you can make money from the stock. So Disney can be a winner for some people and want to be a huge winner, but potential to make short-term gains in the stock at times. So, but sometimes you have to hold it for 6 months. That's the question. Is it worth the wait? Sometimes not. But there is potential to make money on these stocks that have been floundering for a while. Will we see the change into the future? Let's hope so for you Disney fans out there. What else? The earnings per share of 5.43, which is pretty low to be honest. PE ratio 20.48, so they're a pretty safe company. They've brought back the dividend. That's struggled for the company for a while. Their dividend been cut for a few years. It's back and it's only $1 at less than 1%. So there's a lot of work to be done on that level for people that were in Disney before. That have gone out, have not returned, and that's probably why you're seeing the stock market flag at the moment. And when we get to the intrinsic value, you'll see why the stock could potentially be a minefield. Could make you a lot of money if you believe in holding it for a long time. Return on invested capital of 3.5%. Yeah, it's okay, but not going to be a world changer. Free cash flow of 8.5 billion, up from 4.8 billion the year before, and the year before that was 1.05 billion. So they are doing some great stuff in terms of that. That's very encouraging, outstanding. The shares outstanding is down as well, 181 billion from 183 the year before, but they were going up before that. So just be mindful. It's only early on in that, but let's hope they continue to go down and down and down with shares outstanding. Well, let's have a look at the revenue. Yes, this is the big dog. Is the revenue doing what it needs to do? Well, it's gone from 91 billion from 88 billion last year. So what's it doing? They're not really making that money. Money. And we look at net profit. That's improved there, 4.9 billion from 2.3 billion the year before. So they're doing some good stuff there. Let's see if we look at the quarterly numbers of the revenue and net profit and see if there's anything there. We'll have 23 billion. And now 22 billion, so not much in terms of, so they're not increasing the revenue from quarter to quarter, so that's all good. And what's happened here? $26 billion, $2.6 billion, I think, and then 460 million. What's doing there? What is doing there, folks? Some interesting stats here, just I'm not sure what's happening. For them to drop to 460 million net profit on one semester, you have to do more research on that, but not good, folks. So then put you in the question mark, because Fubo TV a really good investment right now. Total assets 196 billion, but down from the year before, 205 billion. And total liabilities is down, which is good, 90.6 from 92.5. So overall, mixture in results here. The net profit is a bit of a strange one, and it won't help your stock price if you're trying to go to the moon. But a lot of the other fundamentals are pretty good at the moment. But they got to get work to do to find more better profitability. Is clearly their biggest aim going forward, to really get themselves back on track. So yes, we're going to look at the intrinsic value now of Disney. How do we calculate that? Well, we're going to look at the current share price, earnings per share, an expected growth rate, with the current bond yield, put it all together, and you get the intrinsic value of the company. I'm going to do a bear case, a base case, an optimal case, extraordinary case, and then out of this world numbers, and see if this stock is right for you. Let's get to it right here at Barry Charles. So yeah, if we look at a bear case on the intrinsic value, we're looking, all this is $110 the current share price, at the current earnings per share of 5.43, at an expected growth rate of 5, so this is a bear case, folks, $104. What? We're pretty much where we are at right now, and that's a bear case. Scratching my head. Then if we go up to the same, we're just going to keep it the same, earnings per share and a 10% growth rate. That's going to be our base case, $161. From 110, you can 50% off just about. Interesting. I didn't even notice myself. Then if we go to optimal and say it's going up to 7.5 earnings per share, the 15% growth rate, then you're looking at $300, folks. $300, and then if we put the expected growth rate of 15 again with 9 earnings per share, then you're looking at about 340. So, wow, what's happening, folks? And then I went, well, if we doubled earnings per share to 11 At a 20% expected growth rate, you're looking at $550 fix. Yes, indeed. Woohoo! If you think it can go to the moon, you buy all day with this stock. But what do I think of it potential for the future? Interesting. I think you'll make money. The last 5 years you haven't, but the next 5 years I'm pretty sure you'll make money. I think you'll see improved rates, but they've got to find a net profit consistency and dividends going up. Those are the two things with them. Dividends going up at a quick rate, as well as making better content as well. Sorry, you're going to make better content, as well as working on profitability. Get more and more profitable, because they're getting all this money at the top, but it's not coming down to the bottom level. Stop paying all these top big seconds. Get it down, get them going, get it rolling, and Disney could be a stock for you. Thank you for subscribing to the channel. Remember to like and subscribe if you haven't already, and have a great day out there.